Trump chaos, of course, hitting the markets again this week. We'll break it down. It's going to be a good one. I do want to thank our sponsor today, and that is Tangem. Let's just jump into what they're doing, and that is self-custody. You guys can go over to tangem.com, get your secure crypto and hardware wallet. Very easy to set up over there, and one of the most secure platforms out there when it comes to self-custody. The way that I would do it is get the 3-card set. These are like little credit cards, work with your phone, doesn't matter what kind you have. And of course, you can begin your self-custody journey. Trade, swap, hold, all sorts of things, including now earning yield. And soon you're going to have Tangem Pay, which is a whole new platform. So get in the right crowd. Use our link down below. Get started. We are going to bring on Mr. Gareth Soloway here in a minute. Before we do that, I want to go to a clip that kind of sets up today's topic, which is really around Trump's new threat. Take a look.
Because if you blinked, you basically could have missed what happened last Saturday night. It's taken to target those 8 European countries, most of whom have basically sent some kind of military delegation to Greenland, saying that basically all of you are basically contravening my effort to take over Greenland. So these 8 nations, which are Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland, will all face 10% tariffs beginning February the 1st, and that will ramp up on June the 1st to a 25% tariff.
So all of this boiling into, of course, Greenland, but really the key thing here is that Trump continues to use tariffs as an instrument for negotiation or forcing negotiations, I should say. This, of course, has rippling effects onto the market. So I want to bring in Gareth Soloway from Verified Investing. How are you, Gareth?
I'm good. Thank you, Paul.
If you guys have not checked out Verified Investing, you can jump over to their YouTube channel right there, of course, and you can learn a little bit more about what they are doing, and of course, subscribe over there to their channel. Gareth, let's get into a couple of points here. First of all, a lot happening in the markets, as well as not only news, but also the markets themselves. S&P holding steady, NASDAQ down 1, Dow Jones now down 0.5, gold is up 1%, silver's up 3%. You know, when you look at this week right now, especially with everything that's happening on the tariff side of things, do you think that us being closed in the stock market today, do you think that the market is going to open a little differently tomorrow with all this pressure now from a geopolitical standpoint?
Yeah, it is interesting. I think the first thing we have to note is that when these big announcements on change like economic policy come out, they're put on these 3-day weekends, or at least they're put out on Friday night. And what it does is it gives the market the most time to kind of relax about the news. So initially the reaction is fear and panic. But over the course of a 3-day weekend here, the idea is that the markets will adapt to it and kind of come back and be more neutral. Now, we're still seeing the futures down pretty sharply here, but I do think that, again, there was a method to the madness here of imposing these tariffs when they were imposed. We'll have to see, though. The idea here from Trump, and we know his playbook at this point, is to strong arm with the threat of tariffs so that he gets others to give in. And we'll see if that works out in this scenario.
Well, you're looking at his playbook, and one of the playbook items is the number 6. I'll show you number 6 when you go over to this. This is one that's been out there for a while. We actually showed this on the channel quite a while ago. And it was interesting because on Sunday, when futures reopen, in this case, stock market is what we see right now, of course, are having a little bit of reaction to the tariff headlines. And then on Monday or Tuesday, President Trump continues applying public pressure, and then investors begin to recognize the tariffs maybe are not going to happen. And then by Wednesday, in this case, maybe Thursday, since Monday is closed, you have a reversal and you have the buy the dip, and then of course the market goes back up. So that's kind of the playbook that has been in and around President Trump for almost the beginning, because it's been tracked all the way down to what has proven to be pretty accurate right here. What if he were to hold this position and say, no, we really do want Greenland and we're going to apply pressure via tariffs? How does the market respond?
Yeah, I think the market it would be much more negative to that aspect, right? The idea here is that can these tariffs being or threatened to be imposed, we know they'll go in effect at the start of February and then ratchet it up to 25%. Will they actually hold? And again, this is going to be interesting because Europe is going to likely call the bluff here. I think there's more and more of a playbook where the threats are serious, but then Trump is very reluctant to do anything that will hurt the market long term, the stock market. And this is something where if the European Union does go the kind of the nuclear route and come back, that you would see a massive sell-off in the market. I think 10% is very possible in this scenario as it comes to a head. And so, you're right. This is different. This is a whole nation now that's at stake. And at some point, you have to say, okay, is this a bully scenario? Will we see these European unions stand up to this scenario and put their foot down, a la what they're trying to do with Putin? I mean, in a weird way, while there's not military action here, it's kind of the same thing. I mean, here you have one country, Russia, coming into Ukraine, trying to take it over. And here you have the U.S. trying to do the same, obviously not with the same methods, thank goodness. But it does warrant the question of who's able to push who here.
Well, and to me, you look at the way Trump has responded, especially when you look at what Scott Bessent and Lutnick are doing, and they're all in WEF, over at the World Economic Forum right now in Davos. And I think the point being is they've been trying to position for quite some time. My question, this is much more, hypothetical, but is maybe the play really at NATO here in general? That would be, I think, a bigger impact to the markets of how that plays out. My question, if you have that kind of pressure on traditional markets, does this not play well for Bitcoin? Because you've got Bitcoin trading now, which is flipping bearish right now. We could lose the 90K. How would this pivot out, and what is your outlook for Bitcoin right now?
Yeah, and this is so fascinating because you have two worlds colliding here. One is the fear factor, which historically has brought Bitcoin down, and then the ultimate safe haven asset, which is hugely bullish for Bitcoin. And I'll show you here on the chart, and I think this plays into it very much, so I'll share my chart and we'll go to that, is right now you are still putting in what we would call a bear flag on the chart of Bitcoin, right? We have this bigger move down here, and this is all inside bar action. So what this does is it implies that if fear hits the market, and we're even seeing it this weekend a little bit in this holiday weekend where Bitcoin is coming down, then Bitcoin could trade lower. But I don't see the big corrections or the big drops that we've seen in past cycles. And the reason I say that, and I'll show you this is a really fascinating chart piece, is that if you look at past bull market highs, if you look at the subsequent bear market, we've always come down basically right to that former all-time high. Here's the 2017 high, and in 2022, we came down basically testing that high. And by that logic, what we can see here is that if we were to retest, the downside on Bitcoin is somewhat limited to only about 65 to 70,000. And again, keep in mind, we were down to basically 80,000 recently. So it would not be that much further to go before we get a major cycle low. And I do think this is where it becomes more important, right? Where you have to start saying, yes, the fear. If let's just say the stock market corrects 10 or 20%, the likelihood is this would drive Bitcoin lower in the short term, like we saw gold in the COVID era, right? When COVID hit, gold actually collapsed as well. But then I think you actually see this pivotal shift in Bitcoin where Bitcoin starts to head much, much higher from there.
So you're looking at possibly another all-time high in 2026?
It's tough to know about that, right? Because we don't know how long the cycle will play out. Like if the stock market heads down, how long does that come? And then at what point does the switch occur where even a stock market declining becomes a bullish scenario for Bitcoin? But I would say the second half of the year in 2026 for me is the bullish half. I think we're at risk here of further downside in the first half and then a recovery, potentially new all-time highs in the second half.
That would appear to kind of stay with the narrative that we're seeing around rate cuts right now. You've got Fed decision in January, no change now at, 96.3%. So is there absolutely no shot at a quarter basis point coming off the Fed? especially
It
with
certainly doesn't look
inflation.
like it at this point, right? I mean, if we look at the jobs market is relatively stable. And again, I'm always kind of iffy on the whole picture of GDP. We see GDP numbers so robust, but if you look at the data, a lot of this is AI CapEx spend, right? That's driving GDP here. If you look at the whole rest of the economy, is continuing to stay very, very weak. And I think that's a weird dichotomy there that we have to start to kind of factor in the near term. But ultimately, I agree. I think in the first half here, you're less likely to get rate cuts until we get the new Fed chair. Once we get the new Fed chair, if we see how Trump has been towards Jerome Powell, you better believe that that new Fed chair is going to be cutting rates, and that'll lead into the second half.
So that lines up quite nicely. If you compare what Bitcoin is doing against Ethereum, and especially as the Bitcoin ETH trade overall, how would you look at Ethereum by end of year? Do you feel like it has a better upside? If I'm trying to invest one or the other asset, without hedging each, how would you play ETH right now?
Yeah, let's take a look at the ETH chart and see what that shows us here. So if we flip over to the ETH chart, we have the same sort of pattern in Bitcoin. And what we're seeing here is this divergent kind of trend line period here where it connects from our April lows, which obviously were the tariff liberation sell-off lows. And what we're watching here is, do we get a break of this 29.75 level on ETH? If that does occur, I see us heading down to the 2100 level here. There's a major, major former high. And then we can see right here where the price broke above and it retraced and then got the big bull move to the upside. So I am bearish on ETH in the near term here, ultimately, like Bitcoin, thinking that, again, de-risking could play a role, especially if the stock market does head lower like I think it will. The question is, do we head down to 2100 and hold that level? Now, if we look at where Bitcoin was back here versus ETH, that obviously would be a pretty significant percentage sell-off on ETH, dropping from 5,000 over 50% back to 2,100. But I would start nibbling down there as well on ETH and start looking for it to turn up in the second half of the year.
You look at some other factors I think that people are following, and that is it does not appear that we're going to see a government shutdown. So that's good news, another thing. However, we're starting to see all of these bills and also I think positioning in DC around other issues that are facing the crypto and the digital assets industry, along with what we're looking at, from a standpoint of more money being injected into the Fed. The Federal Reserve now set to inject another $55 billion between tomorrow and Feb 12th. So we're still seeing QE. Maybe it's not at the accelerated numbers that we saw in the past cycle, but I would say that's normal because the past cycle was quite a bit different. Wouldn't a trader look at this and say, yeah, this is just the beginning of QE, and yeah, we need to be in risk assets?
So I agree with that. I do think that, again, we need a flush out of the markets first. You need kind of that scare factor that we saw last March and April that really knocked the markets down before they could regain, right? And part of this is the whole psychology side of investing, where you get a lot of weak hands to invest because they think it's so easy to make money. They can become millionaires overnight. And generally, history has shown us that those players need to be wiped out. And it's the hardcore people in crypto that survive and thrive, the hardcore people in the metals, right? We've seen the metals and what they've done. For the longest time, you were laughed at for being in gold and silver, right? And now all of a sudden, those long-term holders are seeing the results of this. But ultimately, I think, again, it's a matter of, yes, we're seeing the same playbook. We're already seeing QE, like you said, and it's only going to get more accelerated. In other words, what we're seeing here is the yields on the 10-year already breaking out, right? And that to me is shocking, because here you have a Federal Reserve that is cutting rates, right? And if we go to the chart, we can take a look at the 10-year yield. Look at this breakout that's beginning to happen on the US 10-year yield. But the whole idea is most people would say, but wait, the Fed is cutting rates. But remember, the Fed only controls the short end, not the long end. Well, what's one way the Fed can try to control the long end? By buying mortgages. We did hear Trump just recently talk about doing that, essentially mortgage-backed securities, to try to control the long end of the curve. But I do think, again, this here is telling you that, yeah, no government shutdown, but other players, countries out there that buy the U.S. debt, big funds that buy the U.S. debt, they're beginning to get nervous. There's no fiscal responsibility in D.C. We just talked about how there's no government shutdown, but that's just because we're willing to sign on to more spending, right? Doge, they made cuts early. We're at new all-time highs in spending. It has all gone down the tubes. And that ultimately is going to make those that are buying U.S. debt even more nervous and demand really higher interest rates. And all of this screams to de-risking and eventually the rise of Bitcoin, in my opinion.
Okay, so the rise on Bitcoin, it's really just a matter of timing here.
Right.
You look at what's happening in the metals market, gold, new all-time highs, silver, new highs. Many people would look at this and say, maybe it's setting up for a blow-off top. Silver, we've been talking about $100 silver, $5,000, gold. Could this accelerate beyond that? And if it did, what would that do to crypto in general? Because it feels like there's a lot of money moving into silver over the last 12 months from crypto.
Yes, and that's been one of my big theses for why the stock markets remain near its all-time highs, but Bitcoin has fallen so much, is because investors, you have two sets of investors in the crypto market. The people that have been in this forever, like you, Paul, who have just been diehards, and then you have the get-rich-quick people, right? And they're not going to stick around in Bitcoin if it's not performing when they see silver and the shininess and the run on that. And so there's a lot of money that has moved over from the crypto markets, especially the altcoins, right? The altcoins, we've seen how bearish they've been. And this money has flown into those metals. And so the idea is if we do see a reversion trade on silver, you might get some of that money back in the altcoins in the near term. And just going over to my chart on silver here, let's take a look. One of the interesting things is we are definitely into a resistance zone on silver right around this 94 to 95 dollar per ounce level. And you can see this trend line goes back to November. So it's not a long-term trend line, but it's been such a vertical move that you just connect these lows and essentially you drag this line up to those highs. And you can see we're right up. Last time we hit it, we had a little pullback. We're hitting it again. I'm very curious this week to see where silver goes. And I do think there's a pullback in the cards down to about 80. Then we'll have to see, does it break the trend line and come even lower? But fascinating times, Paul, really is.
Would you double down on crypto? I mean, on gold and silver right now? Would you double down?
I would not, no.
Okay.
Kind of what we were talking about prior of how you get a lot of the get-rich-quick people in, and generally those need to get washed out of the trade first before it recovers. So I'm projecting out here a washout on silver, maybe back to as low as $60 or even $50 this year, and then gold? A resumption of the uptrend.
What about gold?
Let's take a look at gold and see what we have here. So if we look at gold, we have gold that is now pushing above this key level. Needless to say, the tariffs and the kind of the financial worry there that's been announced to 10% for Greenland. That's definitely contributing to the bullishness here. Yep. And basically what you can do is you see the same sort of parallel. And gold, if I had to pick one of the metals right now, gold would be the one that I would choose because it still has upside to this level. Notice where that is. It's right around that $5,000 level. Yeah. And so I do think there's one more push up in gold. I think silver might be the one. Maybe it touches 100, but I'd be very scared about being in silver because of its massive corrective abilities here, where it could really flush out in a short amount of time.
Man, this is, we have got some crazy past few months here. I think a lot of people, there's been a lot of people, I mean, of course, we've been Reporting on Gold and Silver. We've had Andy Schectman on many times kind of leading into that. And I would say 6-8 months ago, it was still kind of a push, get ready for what would be happening with these metals markets, which seems to be going that direction. Copper, though, here's a good one. Copper, gone. This should stop everyone in their track. World's largest online bullion exchange says, we're just out, so... You and I were talking pre-show. You felt like copper had pretty much maxed out here. Do you hold that position right now? Would you not go into copper right now?
Yeah, as of now, I wouldn't go into copper. And again, it's had such a run. In fact, if we take a look at the chart here, look at the trend line. And Paul, I'm more of a technician, so I'm really just looking at the charts to see, not so much on the sentiment or if they're out of copper and so forth. But very clearly, we have this trend line that goes back to 2024. Notice where we hit it in 2025. We had the big correction, and now we've run up into that level and slammed into it again. So for me, I have to respect that trend line of resistance. And I also think it's important to kind of understand that, we take this and say, the latest CPI data showed muted inflation. But
Right.
then you look at copper, then you look at silver, then you look at, live cattle prices, and they're all surging to the upside. And one of the bear cases could be for the market, for the stock market, that is later this year, is that inflation starts to roar back based on all the data points we're seeing here. And I think that is something the market's not factoring in and could hamper the Fed cutting rates in the future, even with a new Fed chair.
Yeah, it's very unusual times right now in the markets. And it's kind of this unusual nature that typically you see crypto running alongside what's happening in the S&P. Has not been the case. I think most of this has been centered around the Clarity Act. This, of course, Eleanor Tarrant put this out, that the White House is considering pulling its support for the crypto market structure bill entirely if Coinbase doesn't come back to the table. We've been reporting on this a lot. And it does put, I think, the market and the crypto industry at odds. And there seems to be factions coming out. And I would say, many people would say, let me ask you, do you think Trump and the administration sold out crypto based on these kind of statements?
Oh, I mean, I certainly don't like to see those type of statements. And I think, this is always the toughest thing, right? Is like, I did not like the Trump coin debut, right? I think that set the tone for me. It seemed to me like a pump and a rug pull and stuff like that. And anytime someone uses crypto in a matter to get rich quick, and granted the president was already very, very rich, but it certainly didn't come across as someone who really believed in the long-term viability of crypto. And that makes me concerned about everything else. Is it all about just getting the deal done and getting some money in the pockets? Or is there really what you and I want, which is the long-term feasibility of crypto to thrive in any environment?
Well, here's the thing. I am not happy with the White House right now, because if they're trying to put pressure on the industry because they are fighting back for the bare minimum of what we have been asking and expecting in these laws, yield, I mean, come on, guys. Let's just call a spade a spade. This is bad banks doing bad bank behavior, like always, going after your yield. And it's interesting that so many people came out and kind of got that thing delayed for a little bit. But now you have the White House saying, wait a minute, we need to get this through. I'm a little concerned with that overall. And I think we'll see if this plays out or if one side backs down, which could be really good for crypto. I think if this goes through, maybe this isn't priced in like a lot of people think it is. Let's get into tokenized assets and tokenized securities. The New York Stock Exchange now announcing development of a platform for trading on-chain settlement of tokenized securities. All of this is happening real time. We're going to see 24/7 operations around this. What do you think about this? I mean, you've been trading for a long time, Gareth. Did you ever think you would see something like this become a thing?
Yeah, I mean, until crypto, probably not. But once crypto become 24/7, right? It just all of a sudden it brings forward the idea that these exchanges, the NASDAQ, for instance, I mean, there's money to be made here. And if there's money to be made, they're generally going to be in favor, especially because it's all computerized at this point, right? There's no physical people that have to be there trading the stocks and creating liquidity. And so I think overall it's a good thing. It means I'll probably get less sleep, but at the same time, it gives the average investor the ability, when something happens in China overnight, at least they're not stuck until the next day before they can exit. Because we know that the institutions can get out, give it to the people, let the people make the same potential moves that the institutions can do.
That's the most fabulous thing. And you look at Solana being one of the cornerstones of tokenized stocks. We've already seen the success of X stocks. We'll probably see even more success as things start to really heat up, I think, within trading around tokenized securities. When you look at Solana right now, because this is a popular token on our network, we have a lot of audience that follows this one. How would you play Solana right now?
Yeah, I'm actually bullish. I actually have a long position in Solana right now, and I'll tell you why. So it's had this little bit of a pullback here, but what I really like is this potential pattern formation in the charts. And I think we're going to actually create this inverse head and shoulders and start to break up. Again, it will have stops along the way, just like this recent pullback. It's not going to go straight up. But if there's one coin of the big players, the top 5, let's say, that I would be in right now, this is the one here. And I think, again, you might have hit it right on the head with this tokenized security trading as being one of the big driving forces for Solana. So I am bullish on Solana here.
Yeah, we had a chance to talk with a couple of traders last week, and one of the narratives that I think a lot of people are missing, everybody kind of thought Solana would not make its way onto Wall Street, and now it is one of the darlings. I mean, obviously Ethereum is, but the fact that we're seeing Solana more engaged on this, I would agree with you. I think it's going to be one to watch. Gareth, as usual, always love to have you on the show. Thank you so much for coming in today. It has been a good one. We're going to watch the markets very closely.
Thank you so much for having me, Paul. Appreciate it.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.